What's going on, everybody? Welcome back to another video. Hope you're doing well, feeling great, and enjoying freedom. It's a great day to have a great day. Today, I wanted to talk a little bit about silver and gold, but even more about what I believe to be an inevitable recession coming our way. We're going to get into it, but really quick, just in case you're new, make sure to subscribe for daily videos, subscribe to my second channel for weekly videos, get yourself some DYDSS merchandise to help support the channel. Got the Lucky line available only until St. Patrick's Day. Come and join us in the Precious Metals VIP Club, which is where I do giveaways, deal alerts, live streams, going live tonight, 7 p.m. Eastern Standard Time, and a whole lot more. And of course, last but not least, go and get your 2 free stocks by downloading Webull and funding your account. Everything will be linked in the description. So today is Wednesday, February 16th, 2022. The current spot price of silver, as I'm filming the video, is $23.44. It's up 10 cents or up 0.43%. Spot price of gold is $18.6230. It's up $8.20 or up 0.44%. And of course, the gold to silver ratio is in the 78 to 79 to 1 range. But again, that's as I'm filming the video, not as I'm editing, posting, or as you're watching. So head on down to the comments and let me know the date and time you're viewing the video and what the current spot price is for you. I'm always curious. All right, so in today's video, we're going to be talking a little bit about silver and gold. But before we can even get into the money, I think we need to first talk about the currency and the general state of the economy and what's going on right now, and more specifically, why I'm personally anticipating a recession. Now, right off the bat, a recession doesn't necessarily have to resemble a pandemic-style economic collapse like we saw right around almost this time 2 years ago. It doesn't need to be that vicious and brutal. We can actually go into a recession without a majority of people even realizing it, because not much in our day-to-day lives would be all that different. But a recession, by definition, is 2 consecutive quarters of negative GDP growth. That's all it takes for there to be a recession, on paper. 6 bad months. And I don't think it's a secret that at this point, this year has gotten off to a really bad start. We're currently halfway through the first quarter of the year, and so far, it's not looking too good. And if this continues and we end up seeing a GDP decline for the quarter, that would already be half of what it takes to make a technical recession. Now, if you go to bea.gov, you can see the Bureau of Economic Analysis 2022 news release schedule. This is really important. You should bookmark this page. But you can see that next Friday, February 25th, some GDP information regarding the fourth quarter of last year will be released. Seriously, keep an eye on the schedule. Now, something that we also have coming up between today and next Friday is this Friday, February 18th. That's a crucial date as well, because that's as long as funding will last to keep the government from shutting down. Right now, the House has already passed a stopgap bill to keep the government funded through March 11th. So right now, all we're waiting for is the Senate to act. At this point, I think most people are just expecting the can to just keep getting kicked further and further and further down the road. And let's be honest, that's likely what this is going to result in before Friday. But we have seen plenty of government shutdowns in recent years, so it wouldn't surprise me in the slightest bit to see another one sometime soon. In addition to that, we have the Federal Reserve tapering that should be coming to an end, and rate hikes that should begin next month. And I say should because there is that small chance that we get the rug pulled out from under us before the scheduled date of action. And don't forget, if inflation continues to climb, the Fed could, in theory, send us into a recession intentionally if that's what it would take to prevent us from getting to the point of hyperinflation. But regardless, whether the tapering and rate hikes happen when they're supposed to, or if it happens sooner, when rate hikes start going up, we can say goodbye to free money borrowing. Companies have been borrowing crazy amounts of money for the last 2 years and using the money for massive growth and expansion. It's been like a steroid injection for a lot of these companies. And individuals are no different, by the way. They've been borrowing money like crazy as well. Crazy amounts of debt, as money was free to borrow, which has been used for a whole lot of spending, which, by the way, keeps the ball rolling even more. Because the more people are spending, the more companies keep growing. And the more companies keep growing, the more the stock price keeps going up. And the more the stock price keeps going up, the more retail investors borrow even more money, this time on margin, to keep buying more of the stock. This has been the cycle for the last 2 years. And personally, I can't help but feel as though when the crazy growth comes to an abrupt halt, a lot of people are going to get burned, especially those deep in margin debt. And even worse, if they're a first-time investor and they think that what's going on right now is normal, because it's not. And remember, if stocks fall to a certain point and you get margin called, the brokerage will automatically force you to sell your positions at a huge loss, because those positions only exist because you've been borrowing money from them. Right now, we're seeing the highest amount of margin debt that we've ever seen in history before. I'm telling you, if things go south, a lot of people are going to get burned. So now's the time, more than ever, to play it safe. And by the way, if all of that happens during or in the beginning stages of a recession, that'd be even worse. But enough of the problems. I don't think that we should be problem-oriented. How about some solutions? Let's be solution-oriented. In my opinion, and from my perspective, I don't think right now is the time to be taking big risks. We are walking on a tightrope right now, so I'm going to stay as far away from margin as possible. I won't be going anywhere near the bad type of debt. I'm going to be sticking to the silver and the gold and hanging out with the blue chips. That's what I plan on doing for the foreseeable future. Now, very quickly, onto some silver and gold. What we have on display right here, some of the usuals. I like to keep a nice little variety on display. We got some 90% junk constitutional silver in the bottom corners. We have some Queen's Beasts right here. We have some silver bars, some silver rounds, some miscellaneous coins, Creatures of the North, a nice little stack of gold right there, by the way, some fractional gold coins, quarter ounce and 10th ounce gold coins. What I'm going to be sticking to for the foreseeable future when it comes to precious metals is silver right now. I want to get more gold, but where the gold to silver ratio is at the moment, I think silver just makes a whole lot more sense. So breaking it down even further, the type of silver that I'm going to be going after is going to be almost exclusively 90%, probably just a whole bunch of Washington quarters. I'll get some dimes or half dollars if I stumble upon them, but I can get the most bang for my buck on Washington quarters at my local coin shop. So when it comes to silver, that's my strategy. That's been my strategy for, to be honest now, about 2 years. And it hasn't even been, let's just say about a year and a half. And that wasn't even intentional. I switched on over from pure silver to 90% silver just because I didn't feel like paying those crazy high premiums. And at the time, 90% silver was actually pretty cheap because at the very beginning, not a whole lot of people were going after the 90%. So I was loading the boat on some 90%, and I've been doing so ever since, over the last year and a half, I would say. And right now, that is my strategy. That is being done intentionally. Back then, I was just scrambling. I was like, all right, what kind of silver can I get? So I was getting a whole bunch of 90%. Nowadays, that's all I'm interested in. That's all I want, for the most part. So I want you guys to head on down to the comments and let me know, what are some solutions or possible solutions you can think of? Let's not be problem-oriented. I know I presented a lot of problems in this video, but I like to think that I provide some solutions as well, or encourage people to think of some solutions. So let's not be problem-oriented. Let's be solution-oriented. Head on down to the comments and let's work on some solutions. If you guys liked today's video, please hit that like button. Subscribe if you're new. Subscribe to my second channel for weekly videos. go and get yourself some DYDSS merchandise to help support the channel in the biggest possible way. We got t-shirts, hoodies, stickers, and coffee mugs in a bunch of different designs. We have the limited edition, luck has nothing to do with it, t-shirt and hoodie, only available until St. Patrick's Day, and a portion of the proceeds are helping raise a little bit of funds and awareness for St. Baldrick's Foundation. DYDSS store will be linked in the description. Come and join us in the Precious Metals VIP Club, which is where I do giveaways every single month, deal alerts every single day, live streams multiple times a week. I will be going live tonight, 7 p.m. Eastern Standard Time. Come hang out. You can watch all of my videos early and commercial free, and there are a ton of other perks as well. VIP Club link in the description. And of course, last but not least, go and get your 2 free stocks by downloading Webull and funding your account. They'll give you 2 free random stocks just for doing so. And then if you share the February promo that's going on right now and refer just one friend to the app, they will give you a spin on the Webull wheel where you have the chance of winning a free share of Google worth over $2,000 right now. Webull link in the description. And I want you guys to head on down to the comments and let me know once again. Focusing on the solutions, not the problems. We shouldn't be wasting our time or energy complaining about things. We should be utilizing our time and energy to thinking of and sharing some possible solutions. We should be talking about and trying to decipher and break down and figure out the best possible way to keep ourselves afloat and to stay focused and to combat whatever comes our way. So if you can head on down to the comments and let me know, number one, are you personally anticipating a recession? Probably within the next year, kind of like what I am. But 2, and more importantly, how are you going to go about combating a recession? What are the steps you're taking today to keep yourself afloat in the event that we go into a recession? Head on down to the comments and let me know anything and everything related to today's video topic. Thank you guys so much for watching. See you tomorrow. Don't you dare stop smiling. Peace.